if you're not familiar with this, every week we make market predictions. Typically, they're around earnings. We talk about 5 stocks that we got our eye on. Do a little fun, have predictions, and then on Fridays we actually do a video. It's called "Where I Was Right, Where I Was Wrong," where we see if we're right or wrong. So we got first up is on you, brother, Fastly.
Yes. So let me go ahead and switch over to Fastly here. I'm going to switch over to Webull. This is actually the public account I use for all of our Chaos Crew folks. So if you guys want to be part of the Chaos Crew and get access to this public portfolio and the daily changes that I make, as well as a daily watch list, make sure you're hitting that join button. You guys can see some of the icons next to their names. They are part of the Chaos Crew. We love our Chaos Crew fam. Love you guys hanging out with us as well. And if you guys want to be a part of that, make sure you're hitting the join button and help support the channel. But yeah, we are getting on to Fastly here, and it's been a rough go for it. You know, I called this drop though. If you guys, you know, got into Fastly, and you know, were watching me on Twitter, I was saying right before this drop that Fastly was a sell, and I mean, I love Fastly, so it's not that I was hating on the stock. It was just that this thing went up too fast, it went up too high, and then the bottom dropped out of it on the slightest negative catalyst, and sure enough, this had a major gap down. And it continued to fall on Friday, or on Thursday, rather, when we were talking about it. People were asking us on Thursday if we should buy into Fastly, and I said, just wait until we actually see some real buying return on this stock. I don't see a spot where we have actually settled down into a relatively decent support just yet, and I think it's entirely possible that we actually see this fall down even more, even possibly into the $70 range. For me, I think if it falls down to the $70 range, it is absolutely worth a buy. You can see here at $75 a share is an absolute monster of a support. We got to mark this here using the Webull app, or the Webull desktop app, actually. If you guys are interested in this and creating a Webull account or using the Webull platform, there's a link in the description. You guys get 2 free stocks through Own the Chaos, and we'd love to have you guys support in that as well. You have to make sure you fund your account with $100, but either way, you get two free stocks valued up to $1,600, which is a pretty cool deal. And yeah, so this is definitely a buy for me if it comes down to a reasonable level. And I'm not sure the selling is done just yet on this one. I still love it. I still think that this, as it relates to remote work, is going to absolutely go crazy. And I think $136 a share, where it was at its height, was probably going to get to that point, but I don't think it deserved to be at that point at this time. So as they continue to develop larger clients and not rely so much on the TikTok stuff, then I think that Fastly is going to continue to move up. I think $100 a share is certainly achievable from this, but I think that it's actually worth a little bit more, a closer look once it gets down into the $70 range.
Yeah, absolutely. Fastly was one that I think blindsided a lot of people, even especially in our crew.
Yeah.
But we did talk about it. You did mention how it was high. Now, if they didn't heed your advice, that's not on us. But I was surprised at how quickly it fell. I wasn't surprised that it went down, but it's an opportunity. It's about when does the opportunity present itself. And I agree with you. I don't think it's done dropping. The question in my mind, and I'll kick this back to you, is it more likely, does it hit 100 before it hits 75?
Yeah.
Because I think it hits 75 before it hits 100.
I think so too. And I think that, you know, like I said, we haven't really seen any kind of slowing down of the selling here since the major gap down. And, you know, we always talk about, you know, grabbing the dip, buying a dip on things, on good companies that where it makes sense. And right now it just doesn't make sense still. I think we just got to see some area of some sort of consolidation, some sort of actual pattern here that represents some sort of bullish move back up. Right now, it's just not there. You know, and really kind of just looking at these technicals, it makes all of the sense in the world to kind of go down here and kind of watch this at the $75 range. I think that's going to be the real sweet spot for this. And we always talk about it in our Chaos Crew about being rip-off Rita and kind of looking for the cheap stuff. And I don't think we're there just quite yet with Fastly, but I would love to grab this below $80.
Yeah, and the last thing I'll say is I am looking at that too. I am eyeing that 75 range, seeing if it holds support at $75 a share.
Yeah.
And if it goes up without me, then that's fine. We've said that before. It can run up without us. But I do think it's likely. it could even go further. That's a question people ask. How much further can it go? It was down over 30%, I think 38% last week. It can go down much further.
Yeah.
Don Fran, who's one of our brethren, and I don't know if he's in here now, but he's usually in here. You know, it could go down to zero. Yeah. That's where the stock can go. So, the big keys is market share and how client acquisition. So right now, TikTok accounts for 12% of their revenue share.
Yep.
Which is a lot for a company. That's a lot to rely on one company. And then the instability of the parent company ByteDance with TikTok, that creates question marks. And obviously they lowered their guidance. But with all that being said, Brad, we'll see. But I think that's one of our predictions. I think it hits 75. Well, my prediction, 75 this week, below 80.
Yep. And then it would be a clear buy for me. And if you guys are wanting to know when we are actually eyeing this up as a buy, make sure you're hitting the Chaos Crew. Hit us up on the Chaos Crew. I'm sure it'll show up on that watch list sometime this week if we see it fall down to those levels.
All right. Let's talk about an earnings stock. So stock number 2 is Snapchat, a Chaos Crew favorite. It has been on our watch list for who knows how long, months.
We love this stock. We love this company.
Yeah, and it was on our top stock for September. It's been moving well. So Snapchat reports earnings on October 20th, which is Tuesday, after hours. They're estimated a loss of 5 cents a share. I am predicting that they beat slightly at a loss of 3 cents a share. What do you got, Brad?
Ooh, it's playing it conservative, playing it safe here. So for me,
you're going to beat positive numbers, aren't you?
I am. I'm going to go positive on Snapchat. I think Snapchat comes up and goes cash positive for the first time, and I think that they crush earnings. Reason being is I think that we are starting to see a little bit of a shift. We talked about Snapchat at length, and we haven't really mentioned this before, but a large percentage, a huge percentage of Americans between the ages of 18 and 30 use Snapchat. And I'm talking hundreds of millions of people. And if there's anything that, we talk about using common sense a lot of times. And try not to be so analytical all the time and throw numbers at you. Just think about this. If you're a Snapchat user, have you not seen a dramatic increase in ads on all the stuff that you're looking at in that Snapchat app? Well, I'm talking about just the stories in general. Like, the ads have been showing up like crazy, and it's almost annoying. And so when you start to see more stuff like that and you're starting to see ad revenue come in, I think that we're just going to see an absolute bludgeoning of these expectations. Not only that, but we've also mentioned about how Snapchat has their VR side of things, where we talked about Louis Vuitton and how they were able to use that technology to basically you could try all of their products using their filters, and I think that is just absolutely amazing. I think it reaches a lot of customers that way, and it's only going to increase from here. I think they end up being cash positive, and we talk about this one and Pinterest being the little brother sister to Facebook and some of the bigger social media apps, and I think that they are really starting to come into their own. I like Snapchat a lot.
Yeah, we both like Snapchat, big fans of it from a business perspective, opportunity growth perspective. Some data I want to give you guys. So this is according to the Pew Research Center, and I actually brought this up during earnings last time, but it's important to remember. Yeah, Snapchat reaches 90% of 13 to 24-year-olds.
It's incredible.
And 73% of Americans 18 to 24 use Snapchat. And so those are key metrics to think about. Additionally, 300 to 500,000 Snapchatters turn 18 every month, which is crazy. So when you think about those numbers, why is that important, Fat Man Zoom? Well, I'm glad you guys asked. The reason why it's important is because advertisers, they're thinking about the lifetime value of the customer. If they can the younger they get them, the greater the lifetime value of the customer is and the loyalty. And so this is great. Yeah. Companies are going to be chomping at their bit to get at these Snapchatters. So that's reason number one. Augmented reality is at the forefront of their plan. I think I applaud them for trying to take a different path, not just a traditional follow what everybody else does. Their priorities are a little bit different. They're trying to really establish themselves in the augmented reality and the emoji world. They really, you can start seeing the parts of that with, we talked about the Gucci partnership where you can try on your stuff virtually.
Yep.
And also Apple partnership. When we saw the Apple event last week, Snapchat was mentioned for the phone's ability to work with Snapchat and how they're partnering with them on augmented reality on their new phone. So all that stuff's great. And the biggest thing right now for advertisers is a focus on direct response advertising. That movement, especially with holiday season coming up, Snapchat's the place for advertisers to be.
Yep, I could not agree more. And I mean, even if they end up missing or they still end up being, in the negative here, I still think Snapchat's a buy. If it gives you any kind of good opportunities, potentially maybe down in the 26.50 area, if by some chance this actually misses earnings, I think that it would still be an absolute gift. Just a friendly reminder, last quarter they did miss earnings. And if you were able to capitalize on this when we said that this was a clear buy and that it was actually finally starting to settle out and create a nice little sideways channel for the move back up, it was done at $21 a share and then moved all the way up almost 30% here up to highs of 28.50. So I think that even if they miss, it's still going to be a buy. The growth that Snapchat's experiencing is absolutely incredible. So this is going to be definitely one to hang on to, whether or not they miss, whether or not they make or miss earnings this time around. But it's going to be fun to watch this one on Tuesday. All right, so we got 374 of you in here watching. Thanks for hanging out with us. If you guys could give us a thumbs up, we certainly would appreciate it. We're going to go ahead and get on to our next one, which is Netflix. And Netflix has earnings coming out on Tuesday after hours. Their estimated earnings per share are at $2.12. This is going to be an interesting one for me because management said back in July that much of the growth is simply borrowed from future quarters because obviously the Rona, right? And so we've seen some exponential growth on this one as I'm pulling this up as far on Webull here, and it has just been an absolute monster. We look at the daily chart, continues to go up. It seems to be one of the biggest hang-ups on this seems to be right around 575. And so we'll see if this actually runs up to those earnings on Tuesday after hours to that 575 range. If it does, and you happen to grab it down here in the 530s, that is something that I would probably honestly consider taking some profit on. If you want to hold on to some shares going through earnings, that, be my guest. But here's the thing about Netflix. Historically, the reaction to earnings on Netflix has not been great. Even if they beat earnings, last 2 quarters, they ended up beating earnings and it fell flat. And so this is going to be very interesting. The biggest, I think, the biggest factor here is going to be growth as far as subscribers are concerned. They're expecting around 2.5 million new users, new subscribers to Netflix. I actually think that they do beat this, but this is what worries me, and that is going to be content creation. If they come out with an outlook that says, you know what, we're really struggling with content creation because we've been backed up because of the Rona, haven't been able to have our actors in here, haven't been able to get anything going on content creation as far as creating new content, that may be detrimental to the platform. We'll see if that actually comes to light this coming quarter. I've actually kind of been a proponent of this area of concern for the last couple quarters since the Rona, and so I'm just worried about that. But we'll see what happens here. I like Netflix. I think they come in at $2.17 a share as far as Netflix is concerned. What you got, my man?
So you have 217. All right. So Netflix, I have beating. I have at 222 a share. Some metrics that stood out to me for Netflix. So they had 2.5 estimated new subs projected for this quarter versus 10 million quarter 2, 16 million quarter 1.
Yeah.
Not beautiful, not great. Now, a lot of analysts are expecting that number 2.5 to be low. So if that, I think that's going to come in at 3.5 million. But if it does, that bodes well. That's something to keep an eye on as the new subs. But it's obviously concerning the numbers that are going down. You expect them to go down, but that's pretty drastic.
Yeah.
Keys, content pipeline. You've been preaching about new content for a while. We know there's no content right now, but they've got to give us some outlook on content. Guidance, always really important, and market share. Hopefully they can sort of exhibit that companies like Disney, they can coexist.
Yeah.
And it's not eating to their market share. So like people are cutting the cord, but maybe they're keeping Disney and Netflix or 2 or 3 of those services. So they got to show that the rise in Disney and their competitors that are streaming and the ones that are coming aren't eating away at their market share. So those are going to be the keys as we look at Netflix. I think they beat, but I do see this having a pretty solid pullback. I think it's going to be really hard for them to give hope to their investors. So I think this is going to come down.
Yeah, it'll be interesting. I mean, with 2.5 million, it seems like it's quite a drop off. And I think that's almost kind of like a slap in the face considering what they have done in the previous quarters. So, sure. I mean, I think they beat, and but I'm agreeing with you. I think that we do see some sort of drop off here as far as the price is concerned. I think we see a run up going in the earnings, and we'll probably likely see a sell off after earnings. But it's still definitely one to watch for, and make your plays based off of those sentiments. And I mean, I guess we'll just kind of have to wait and see. I mean, I'm hopeful for Netflix. I think they come in and see some solid growth, but I just have a lot of concerns about them.
Yeah, absolutely. So the next stock we have is CMG Chipotle. So they have earnings estimated at $3.40 a share. They're Wednesday after hours. So this is hospitality wise, I think there's this top tier of stocks you can look at. So I put Chipotle at the top with Starbucks, with Domino's. There may be 1 or 2 others in there, but like those 3, I look at and I'm like, damn, they do it right.
Yeah.
And so Chipotle is built for the pandemic. They're an efficient company that manages costs really well, great balance sheet, great fundamentals. And so I think they have a monster quarter. $3.82 a share is what I'm predicting.
$3.82 a share. That's quite a beat. But I don't think it's crazy. I'm usually the one coming up with the bold predictions here, but that seems like it's a pretty good number. That's a pretty good number. And here's the thing about Chipotle. They've been able to just make this amazing pivot. We saw that Domino's was kind of already set up for something like this. And we saw, a lot of the other companies that kind of were already focused on delivery that were really set up and did well. Same store sales and all that stuff nobody really cared about, but Chipotle, the manner in which they were able to pivot and kind of really react accordingly and see the kind of growth that we saw from them has been absolutely amazing. And you can see on the chart here where in September, when everything kind of came down, this came down and reached a support at 1193. It closed on Friday at 1339. I think this is still going to be buy. I think we see a run into earnings here. I do think that they also beat. I was having them come in at 363 a share. But you know what, man? The more that I'm thinking about it, I think you're probably going to end up being closer than I am on this one as far as Chipotle is concerned. I think we do see a Domino's like beat from them, and Domino's miss. But I mean, as far as growth is concerned, I think that we see that kind of growth from them. But I think Chipotle has done a much better job at making sure, as far as cost is concerned and how it's affecting their bottom line, I think they'll be doing a much better job at that. And I think they do end up coming in and beating them pretty handily. Chipotle has just been an amazing company. And man, if they can survive something like this, they deserve a higher valuation.
Well, and real quick, they did make a really quick pivot to capitalize off pandemic and focus on drive-throughs. Yeah. So we should hear about that now. Maybe not the numbers are reflecting in it, but the guidance should reflect in it. So hope to hear news from that. If they give good news on that, this stock will move.
Yeah, 1384 is the all-time high. I think that if we do see that, we should see an easy break over those 1384 highs. That'll be pretty amazing. All right, so next and last here we have is something interesting, and I don't know if anybody has been really paying attention to Tractor Supply, but TSC has been just a staple in this little area of just agriculture and tractor supplies and stuff and everything in that area. The company is amazing. If you want to compare it to another company, it's kind of in the same vein, but not really. But they do things that are similar. I don't even know what I'm trying to say. I keep it. My mind just completely went blank. But I like to compare them to Costco. And the reason is because of the way that they treat their employees, the way that they run their company, and the way that they issue dividends. It's all very similar. And that's what I was trying to say, that Tractor Supply isn't exactly like a Costco, but the way that they run their company is very similar to Costco. And that's why I like the company a lot. And I like the fact that Jose Matute just brought up that it looks like a cup, because that is what really got me excited about Tractor Supply as well. This looks like a really nice cup and handle pattern here. And if we can get a breakup over 155, look out on Tractor Supply. I think we see a really nice move from this thing. It has done absolutely amazing since the pandemic. And I think that they've just will continue to crush it here. They have started to break into e-commerce as well as their mobile app. It's pretty amazing when you start to think about, agricultural supplies, and that they're also breaking into the technology that the likes of Walmart and Costco and all the other ones have, the curbside pickups and that sort of thing. They've been able to pivot quite well. No surprise to me as far as Tractor Supply is concerned. They come in on what is this 22nd, so that's Thursday. Pre-market at 135 is the estimate from analysts. I think they come in and beat this. I think they come in at 147 is what my predictions are for Tractor Supply. I like them a lot. Let's see here. Well, I'm looking at my notes here. Looking to add at 281.8 million, and that's what they have in their cash position. A lot of people were concerned about their debt, and I don't think that has anything to do with how well the company is being run, just because of all the cash that they do have on hand. There is a such thing as having good debt and bad debt. Tractor Supply knows what they're doing, and they're using that debt to just continue to build and grow their company, and I don't think that'll affect their bottom line at all.
Yeah. I echo those sentiments. I have estimates. I have a beat at 150. I don't know. I was feeling good. This week. I felt like last week I was really unsure of myself. Conservative. I went all for it, and I believe in it just simply for the fact of the projects, right? Like, yeah. I'll take Costco. I agree with that example. And I actually liken it also to like an AutoZone.
Yeah.
And so that, the rural aspect of it, the retail aspect of it, my thoughts are like, all the benefits of the things that are outdoors or outside or getting out of your house, like any activities to just keep your sanity.
Right.
I think a company like this benefits. So I think that they are going to beat. I think that they're going to beat quite easily. So look forward to that. We'll check that out. With that being said, if you like these are our top 5 for the week. We'll be posting a video on Friday evening to let you know where we got it right, where we got it wrong, but I'm sure we're going to bat 1,000 on that one. If you like this, listen, we have a Chaos Crew. It's $5 to join. We give a daily watch list of top 5 stocks every morning that Brad sends out of what we're watching when the market opens. So click the join button on the channel next to subscribe, and you'll get that watch list from us.